2020 Paper 2 Section C. Let's get right on with this 25 mark question. So, evaluate the likely impact of cutting tax rates as a policy to increase economic growth. First things first, what does that remind you of? What type of policy is that? What would we call that? Of course, that is a type of fiscal policy. And if we're cutting the tax rates, what would we say specifically? What type of fiscal policy is it? It is, of course, expansionary fiscal policy, as we are trying to expand the economy. We're trying to increase economic growth. Let's have a read of the stimulus. It looks like it's about the US. So in 2018, the US government cut its corporation tax rates from 35% to 21%. So it was a significant drop in the corporation tax rates in the US, and income tax rates also fell at the same time, where the top rate fell from 39.6% to 37%. So very interesting question. Quite a simple question, to be honest. So you're really going to have to add that detail, force that detail in there to differentiate yourself from the usual applicant, as it's a very simple chain of analysis and lots of students will know it, but you need to show the examiner now why you are that top level student, why you deserve the A-star mark on this question, and that's where it's slightly difficult. But yeah, let's get on with answering this question. Okay, so let's think about strategy of how to tackle this question. So the way I would split these paragraphs is I would probably split it in just the different types of taxes. So there's lots of different taxes you can pick. There's VAT, there's national insurance, there's of course the obvious ones such as corporation and income tax. Now the only one I would slightly consider is VAT, but honestly, if I was being simple, my main two paragraphs here would be first one on corporation tax, big paragraph on corporation tax, big paragraph on income tax, and then of course the opposite side of the spectrum with regards to the evaluation. So yeah, the first paragraph would be on how cutting the rate of corporation tax would increase economic growth. And like I said, the main thing about this question is not just you knowing the chain of analysis, it's you showing the examiner, you differentiating yourself to the examiner that you are a high level student. So you need to add more detail, think slightly outside the box to show the examiner, okay, I know my content, I know my stuff, I'm able to adapt myself to different situations. So that's what I'm going to try to demonstrate here in this question. So the first thing I'm going to draw here is actually a business cycle diagram. Why I'm going to draw a business cycle diagram here, since that's how I'm going to start my chain of analysis. Essentially, like I mentioned here, we're using expansionary fiscal policy, and instead of me just saying we're going to, okay, one impact of cutting tax rates, I'm going to first introduce it as expansionary fiscal policy, but then to add a bit more depth to expansionary fiscal policy, when do we use expansionary fiscal policy? What stage of the business cycle would an economy have to be in for us to use expansionary fiscal policy? Of course, that would be a recession phase. Why? During recession, of course, we have negative economic growth, so when we try to come out of the recession, we use these policies to push us out of the recession. So definitely, I think a really great diagram to draw here is the business cycle, and 100% later on I will be using it for evaluation also. There would be a positive impact if the government cut tax rates, e.g. corporation tax, as a policy to increase economic growth. Now, thinking deeper into real world application, of course, in the last few years, we've heard about the UK's stance on corporation tax. Of course, we saw the rise in corporation tax from 19 to 25% in 2023. However, the UK has a quite recent example also of cutting its corporation tax rates. As, for example, in 2017, the UK actually, George Osborne, the Chancellor at the time, actually cut corporation tax rates from 20% down to 19%, and actually wanted to cut them further in 2020 to around 17%. However, the cut in 2020 never came, since, of course, Rishi Sunak was very strict on the budget. We had very tight fiscal pressures. But yeah, so an example of a cut in the UK's corporation tax rate would be 2017, where George Osborne, the Chancellor, cut corporation tax rates from 20 to 19%. And I mentioned this statistic quite a lot, where the UK technically, and especially in 2017, has the lowest corporation tax within the G7. But now, let's actually think to the motivations. Let's question why the UK government, the Bank of England, why they set the corporation tax rate this low. And that is, of course, due to what they want to do with regards to foreign investors. They want to encourage foreign investors to invest in the UK. Why? Since, of course, it kind of links to your Unit 4, the development topic. Since if foreign firms are investing in the UK, it leads to job creation within the UK, the domestic industry, the domestic employment within the UK stays high. Of course, means for the government, passing on benefits to the government, such as increased tax revenue, increased VAT, increased income tax, etc., etc. But yeah, of course, the main reason for the low corporation tax within the UK is to encourage and foster business investment. But let's get back onto the chain of analysis. And like I said, this is a very accessible chain of analysis for a wide range of students. Since if a student knows what corporation tax is, of course, it means more profit for firms. It means firms will invest more. Investment is a component of AD. Shift AD out, increase economic growth. That's like a 5-line chain of analysis. Of course, you as a top level student knows that. but you need to link. This is where you need to be holistic. You need to be comprehensive. You need to link all these different parts of the spec together, to try and develop a nice chunky chain of analysis. Show the examiner why you deserve that top level, that top band, and differentiate yourself from other applicants. This is why at the start we've included this business cycle diagram. So I would have stated my point. So the likely impact of cutting tax rates, e.g. income tax, e.g. corporation tax, will further the policy to increase the UK's economic growth. E.g. When the US decreased corporation tax in 2018 from 35 to 21%, or in 2017 where the UK, the Chancellor George Osborne, decreased corporation tax from 20 to 19%. So that is my point, and then my application. So the two first stages of my paragraph are done. Now let's move on to the chain of analysis. So how would I get started with this chain of analysis? I would get started by mentioning essentially the business cycle diagram. So like I mentioned earlier, cutting tax rates is an example of expansionary policies, and that's how I would get started here. So the UK government would pursue expansionary policies when the economy is in downturn. When the economy is in the downturn of the economic cycle, such as a recession, this is where an economy suffers 2 or more consecutive quarters of negative economic growth. The government is forced to pursue these expansionary policies. Why? Since in these times of negative economic growth, they need to push the economy out of these negative cycles, these negative growth cycles, the contracting economy. Therefore, by pursuing policies such as expansionary fiscal policy, where they cut tax rates, e.g. cutting corporation tax, it helps stimulate AD and leading to positive economic growth. So now we've given the overall detail. Now let's jump into the specifics and jump into why decreasing corporation tax specifically is going to cause economic growth. Of course, if we decrease corporation tax rates, let's think about different shareholders. The main one, of course, is firms. How is it going to affect firms? It's, of course, going to lead to more retained profit for these firms. And if firms have more retained profit, it will likely increase the firm's investment as they have more money lying around. Therefore, let's think about it. The classic assumption in microeconomics is firms are profit maximizers, and a really good way to further that profit objective is to expand. For example, if a firm has one branch which is doing extremely well, the likelihood is that they will try to open another branch, as they will see if that branch can do equally as well, thus further their profit. So when firms have retained profit, it's likely going to increase investment, which is of course exactly why we want, since that is a very simple chain of analysis after that. As when firms increase investment, of course, we would 100% throw in an LRS diagram into this, LRS AD. Why? Because increased investment is of course a component of AD, thus causing AD to shift out, and it depends on what a firm invests in. For example, a firm could invest in specialist capital. For example, they could replace their human workers with specialist machinery like self-scan instead of human capital. Therefore, that would of course increase productivity within the economy, and more importantly for LRAS, it would increase the productive potential of the economy. We can now produce more output than we could before, thus meaning that we have both an AD shift and we have an LRAS shift outwards, of course both leading to economic growth. And that's how you can transform a fairly simple, a fairly low level chain of analysis, that top level, that maximum mark, so you're able to show your examiner the depth of your content knowledge. And the main thing I always try to emphasize to students is the examiner has no idea how hard you've worked, how much you've revised. This is what exam technique is: showing what you've got to the examiner, showing that knowledge, showing those months of revision to the examiner, and be able to put it out on the paper. That is literally the epitome of what exam technique is. It's the application of your knowledge onto the exam paper. But now, that's how I'd write that paragraph. Let's now move on to the evaluation stage of this paragraph. The main thing I always suggest to students is read through that chain of analysis, find any assumptions we are making. So let's have a read through this chain of analysis and see if there's any assumptions that we are making. The first one that quite literally pops into our mind is right at the end of the chain of analysis, where we talk about more retained profits for firms, therefore these firms increase investment. And of course, this is a macro paragraph, but you can think about it in a micro sense as well, where a classic evaluation we make for firms with super profit, like monopoly firms, is that it depends on the shareholder, it depends on the firm's objectives, it depends on how a firm allocates its profits. As of course, if this firm makes more retained profits due to more corporation tax, it could just mean that the shareholders are lining their pockets, the shareholders getting paid more dividends, or the firm is just taking more money out of the company. So essentially, more profits for firms does not guarantee an increased investment for firms. So it's a really good evaluation point, and it limits the degree to which the corporation tax actually has a positive effect on the economy. Another valuation point, which is really embedded in real world applications, so examiners will love this, is, if we think back to 2020, the plan was originally, before everything hit, to decrease corporation tax from 19 to 17%. But why was this never implemented by Rishi Sunak? And that was, of course, due to fiscal pressures. As if we think about decreasing corporation tax, what does it do for the government? It, of course, is a massive part of government's tax revenue. Therefore, let's think how this interacts with the other government objectives. So now, if we're receiving less government tax revenue, this will therefore mean the budget is worse off. So we will be running a worse budget deficit, a deeper budget deficit. And what effect does budget deficits have? Of course, it means the main problem with large budget deficits is it adds to the overarching problem, which is national debt. If we consecutively run large budget deficits, this means our national debt will continue to increase, and we have extremely large national debt. What does that mean? It means interest rates get higher, there's higher repayment costs, and you could comment on different aspects of this, where you could comment on whether that means that future generations will have to pay higher tax, or you could talk about the risk of defaulting, debt to GDP ratios, where if the level of debt gets too high, the repayment costs are too high, it causes austerity, means that we don't have enough money to spend on things like public services, as we're spending so much just paying back our national debt. So it really depends on whether cutting tax rates is the best policy in the long term for pursuing policies such as economic growth. That's quite a high level evaluation point. You can go about it in many different directions. It's a really good structure, but don't worry too much if you don't understand that fully. Like I said, it's for the top level of students. But yeah, that's how I would attempt that paragraph. And now let's move on to that second paragraph. Moving on to the second paragraph, which of course we said is going to be decreasing income tax. Now, why will decreasing income tax further the objective of increasing economic growth? Let's have a think about this. So let's firstly think about an example of when maybe the UK or any economy has decreased income tax. The UK doesn't really. We're quite a high tax nation, as you can imagine. If you think about low tax nations, you think about places like the Middle East, Dubai, but the UK did kind of recently reduce its tax rates. So Liz Truss, some of you may know her as the shortest serving Prime Minister ever, but she, it never went ahead since the plan was abolished, but she planned and she announced to totally get rid of the 45% tax rate. So the highest rate of tax, the highest income tax bracket, she was planning to get totally rid of that. So that is an example of where the UK planned to get rid of the highest rate of income tax. But as a lot of you will know, she announced it and then there was massive market uncertainty, so it was reversed shortly after, but it was definitely put into place for a very short period of time. But on to the main chain of analysis. Decreasing income tax is always going to be a fairly simple chain of analysis, but let's try to add a bit more detail to this. So decreasing income tax, the main thing is going to, of course, increase is income, but let's be a bit more specific. So it's going to increase individuals, households, disposable income. What's the difference between income and disposable income? Of course, disposable income is income after tax. Now, if individuals have more income after tax, it will therefore mean their marginal propensity to consume, their MPC, will also increase. Why? What is MPC? MPC is how likely you are to spend the next pound, spend an extra pound. Therefore, if you have more money after tax, you have more wage actually coming in, it means that you're more likely to consume. So with higher MPC, households will spend more. Therefore, you could go into even more detail where you talk about firms. Firms will make more sales, more revenue, more profits. Therefore, this will lead to firms with more profits. Firms expand, hire more workers, and of course, what we're linking all of this to, of course, that is a classic example of the multiplier effect where firms expand and the initial investment essentially just keeps going and keeps expanding. But yeah, overall, these would all lead to an increase in consumption. And like we know, if you're just thinking about the AD formula, consumption makes up a massive proportion of the AD formula. It makes up around 60% of AD. Thus, any increase in consumption is going to cause AD to shift outwards. And when AD shifts outwards, what happens? Of course, real GDP increases, as you can see, from YE to Y1. And of course, this paragraph is going to be quite brief since income tax is a fairly simple chain of analysis. Like I said, you could do the paragraph on VAT. It makes it a bit more interesting. You could, of course, now we talk about valuation. VAT, of course, a great aspect you can go into detail with VAT is the regressive effects, the effects on inequality. Since VAT is a flat rate, it affects everyone the same. We do usually call it a regressive tax, thus worsens inequality. But with regards to income tax, how would we evaluate the impact of cutting income tax causing economic growth? And a great evaluation point to that is the diagram we used in the last paragraph, which is the business cycle. Since, of course, if we think about if we're in the downturn stage of the economic cycle, if we're in a recession and income tax rates fall, will that significantly increase consumption? No. Why? Since consumer confidence will be fairly low, and if consumer confidence is low, even if they have more money, they're more likely to save. The marginal propensity to save increases since they're uncertain about the economic climate, about the economic future. As for example, in the cost of living crisis, we saw savings ratios of around 10%, which means households were saving up to 10% of their income. Why? Because they were uncertain on what's going to happen next with things like soaring energy prices, food prices increasing massively. Individuals were really unconfident. They were not very confident in the economy, thus meaning despite a decrease in income tax, despite them having more disposable income, they will not increase their consumption, thus meaning the positive effects of AD shifting out, economic growth, will not be felt. So any sort of expansion policy, usually a really good evaluation point is business cycle and just talk about confidence, whether that's animal spirits or whether that's consumer confidence. So thinking more in depth with inequality, quite a niche point I was just thinking about. It depends on the economic background to which consumption increases. As let's think about this. When income tax falls, who is going to have the biggest boost in spending, for example? Since the high income households, realistically, will their spending increase significantly? Probably not. Why? Since they already have a high enough income to purchase all the goods and services they want and they need. Therefore, even if income tax rates fall, it will just lead to extra spare money, just extra savings for them, as they already buy everything they want essentially. Whereas low income households, the MPC will increase significantly. Why is that? Since low income households genuinely do not have the money to purchase the goods and services they want and need. Therefore, with them now having extra money, extra cash, it means that they can now demand some of the goods and services they've wanted. But if the consumption is only coming from low income households and not so much for the high income households, it will mean the overall effect on consumption won't be felt as dramatically. And of course, you need to remember, where does most of the tax come from? Most of the tax does come from the high income households. Where does most of the spending come from in the UK economy? The high income earners, the high income households. So that is why there's a massive problem of when the UK has one of the highest rates, I believe it might actually have the highest rate besides China, of millionaires leaving per capita, which of course why brain drain is such a big issue within the UK. But yeah, I'm going to wrap that question up there. It's a really good question to test your exam technique in the sense that, like, these chains of analysis are fairly simple. And now it's your job to now show the examiner that you're not just a lower level student, that you have that level of detail, you have that level of knowledge. So it's the application of the knowledge from your mind to the exam paper, which this question tests. So it's a really good question for exam technique. But yeah, let's move on to the next 25 mark question.